15 years ago. Nobody can survive in a domestic market alone. And here, the Chinese have brought together some intuitive ways to do business in the United States in areas where the United States was not so adept at. So I think that there's a large markets that are available. When they come here, though, they have to be used to the fact that when they bring people here, those people are now subject to U.S. income taxes. There's a slew of rules involving residency. How long you're here for, is it permanent? Are you a green card holder? Do you become a U.S. citizen? This confronts all of the visitors who come to the U.S. and whether they are going to make the decision to stay in the U.S. or leave. And I can tell you, and it's not just from the Chinese standpoint, many of my clients are international. They come to the U.S. and their initial plans are that they're going to leave in 3, 5, 7 years. There's a magic number with if you become a green card holder and you stay here more than 7 years, then you're deemed to be a long-term resident. And that has its own implications because you're then subject to U.S. estate taxes. And that is something that I know that the Chinese are actually thinking about, have not implemented an estate tax. And an estate tax is fundamentally a tax on your entire wealth. So planning, pre-planning coming before you come to the U.S. involves not only income tax planning, not only how long you're staying here, but when you will leave, or if you are staying here, to do planning to get around or try to minimize the overall estate taxes. Income taxes in the United States are fairly heavy, and they are something that's often forgotten by most people who come to the United States. And that is that there are state income taxes with their own set of rules, normally following the federal rules, but with their own idiosyncrasies. That combined with the estate taxes in states becomes a very financial burden, and planning for it is something that is needed to be done. And I think that the Chinese who are now coming here are more aware of this and are doing pre-immigration planning.
Wonderful. Useful information for, I guess, for a lot of the audience here who are involved in the both U.S. and China investment side. So the next question we'll have for Mr. C.K. Zheng. So Mr. Chen, as a senior officer at the Credit Suisse, you are, I assume, involved with a lot of evaluation of the risk, right? The banks extending finance, etc., to a lot of entities. Some of them are probably Chinese entities who are in the U.S. doing business. So when you look at the trade flow between the U.S. and China, look at the investment flow, what are the risks you're looking at? And also, can you comment about the rising or the coming discussion of the internalization of the R&D issue?
Thanks. First of all, today, my view is my personal view, not represent Credit Suisse. Sorry. All right, can you hear me?
If not, you this one.
Hello? I think China, obviously, is a very interesting country. When I grew up there and came to the United States some 20-some years ago, very different. Every year, every other year, when you go back to China, you can see the change. Fundamentally, when you look at any statistics, data, you have to look at people. And everybody from China knows Chinese people work really hard and really love money. Very motivated, which make a big difference. And if you go to Southern Europe, people lay on the beach. You don't see people lay on the beach in China. when I grew up in Wenzhou, people really take a risk. Obviously, when you get things wrong, you kill yourself, jump out of buildings and windows. But if you look at China, and you go back to some fundamental things, China grew from 1.5 trillion GDP 10 years ago to about 9 trillion today, compared to the US about 17, 18 trillion. And you grow 7-8% very quickly, you become the biggest economy in the world. But China is still very poor, unfortunately, if you look at some of the numbers. If you look at personal wealth, China average individual is about $20,000 versus the US about 300,000. If you look at the millionaire, the individual has $1 million wealth, net wealth. In China, it's about 1 million people out of 1.3 billion people. So you're one out of 1,000 people to make a millionaire. Versus in the US, you get about 13 million people, which is about 1/20. There's a huge amount of opportunity in the US to make it successful. Now that said, I have a huge amount of faith in China to grow, not only from a GDP perspective, but from a wealth creation perspective. I'm sure a lot of people here try to figure out a way how to become rich. Otherwise, why you bother spending 2 hours here to talk about some theory? And I see there's so much opportunity in China, and it can leverage up in the US in some way that it becomes a win-win situation, because in the US, people see so much potential in China. In China, people respect the US in terms the market being out there for 100 years and the high demand for technology. And one related issue is really the foreign currency. I think given the number of the trades you can see, because right now is Professor Carpenter actually mentioned, China took over the US as the biggest trader. So every year you get over 4 trillion of imports and exports, which create a huge amount of currency risk. So if you are multinational or you are a Chinese company, you either have Chinese yen or you have dollar or some other currency. And you don't know where the currency goes. Well, for the last few years, currency goes always appreciated, and it's great. That's why there's a lot of things called carry trade. Because if you can earn 5% just risk-free income in China versus here, not much interest you get paid. So you can actually see a lot of carry trade. People do borrow in dollar and invest in yen. And you can earn almost arbitrage risk-free 200 or 300 basis points. Now obviously the Chinese government is getting very smart nowadays. They actually try to let the currency fluctuate a little more and try to discourage people speculating in currency market. But that actually creates a lot of interesting dynamic that there's a huge amount of things that the companies want to do to hedge their risk. Because if you have more volatility in the currency market, means you have a more volatile earning results potentially. So that's actually encouraging more companies to hedge their currency risk. Obviously, you can hedge a lot of other risk, whether it's gold or commodity or any other type of risk in the financial system. But the one simple example is how do you hedge your currency risk. And given that there's a lot of offshore market right now developed, in Hong Kong, London, I'm sure there are a lot more things going on. So you can see the derivative market, I would say at this stage, probably still in the infancy stage. In the US, you have about the 700 trillion of notional derivatives in the marketplace. I was in China right now, they just start to think about the derivatives market. You only have the futures market, you only get the first futures in equity index, but I'm sure the option market is going to open up to give investors a lot more ways to hedge their risk. So I would say at this stage we see some flows going on, but I would expect a huge amount of exponential growth in the future.
Thank you, Mr. Chen, for the great insights. And so the next question, we'll have a question for Mr. YiDu. So he, as a senior executive who is from a Chinese pharmaceutical company and is based in the U.S. to manage the joint venture arrangements here. So the question for you, Mr. YiDu, is what's your corporate strategy to develop in the U.S.? Or what are the opportunities and challenges you are seeing for Chinese companies who are investing in the U.S.?
First of all, I want to thank the organizer to give me this opportunity. When I first got the invitation, I was so excited. My wife actually, after she looked at the name list and teasing me, said, "Are you sure you're going to the right forum? You know nothing about investment." So, well, she's partly right. I actually work in the pharmaceutical company in the pharmaceutical industry for almost 10 years. I don't do well in the investment myself, but I do know this pharmaceutical industry is really a good area for investment. So thanks for the question, and I really appreciate that. Actually, I want to talk a little bit more about our company. So I'm from a Chinese company called Huahai, Huahai Pharmaceutical, Huahai Zhiyang. It is a company based in Zhejiang, Linhan. Actually, this company has some history. I want everybody who doesn't know this company to remember this fact that we are the first company who got the FDA approval for the final product, a drug product that can be marketed in the US. So this is the first Chinese company that got this FDA approval. You know, this pharmaceutical industry is a very strict regulated industry. It's have to follow, all the rules. You have to deal with FDA. If you file in the EU, you have to deal with EMA. So all kind of the regulatory agencies you need to deal with. And so to our company, we really found out, and actually we didn't start from yesterday. We started actually from 8 years ago, which is in 2006. Huahai has already started their US office and tried to get involved in the US market. So that actually followed up the Professor Carpenter's last statement that even like 8 years ago, we have realized that the domestic capital need to go out of this country, out of China, and go to the United States, which is make out to be a very right decision because U.S. is a well-developed market, especially in the pharmaceutical industry. It's well-regulated, and it has the best technology, we have to say. All through these years, we have seen that Huahai has achieved so much. We gained over 20 FDA approval on the final product. Not only the final product, we can not only sell our final product that was manufactured in China and imported to US, we can also market and sell it in the US market. So which is another thing I want to say that not only we have to build ourselves to get familiarized with US FDA regulatory affairs, but also we need to build our channels, to deal with all the retailers, to deal with distributors. This connection, these channels are not built in one night, overnight. So I would say some take-home message is that our strategy is that if we want to go forward, it's not one-day work. We have to start early to do it right, and you have to follow the rules. And also, I want to say, currently I'm working, I myself is actually working on a joint venture. I'm working as a strategic joint, alliance manager. Huahai actually signed a joint venture with a US company called Onco Biologics to co-develop some biologic product in US. And also we are going to do the tech transfer to transfer this product and manufacture it in China as well. So that said, China really not just to give up the manufacturing. I won't say that China is trying to upgrade its manufacturing capabilities to a high-end technique, and biotech is one of it, and IT and all other high technology manufacturing is what China is looking for. And US definitely has the best technology, especially in the biotech industry. So we decided to go in there and to work together with Onco Biologics, form the joint venture, and we will use Huahai's capital to invest the 4 biologic products that we are going to co-develop and do the tech transfer, and eventually Huahai will take, to learn to take over all these technologies in the process, and we'll transfer them to China and file them in China to market these, molecules in China as well. So that is a Huahai strategy, that we are not looking at the China's market. We are looking at the global market, and we are looking at the product not only going to be filed and marketed in China by using China quality standard perspective, but also to use US and the EU quality product, that we are going to use the best process and technology, and we are going to manufacture the best quality product for the China market as well. So to make the story short, actually I want to highlight several take-home messages. I will say first thing first, there's never been a better opportunity as now to go in US to get a good deal on the right product and the right technology. So if there's any people here that is from any investment institution or anybody from China as well, definitely, US there is a lot of opportunities that we can work together to, look into the US market. That there are a lot of companies that need some investment from global, and we can form this kind of joint venture eventually, and also to just you need to follow the rules and deal with business with all the with US companies. And also the second take-home message is that you have to follow the rules, not only, especially the pharmaceutical industry, that you have to follow the regulatory agency. They have all the guidance, and also you have to follow the business rules when you are dealing with American companies. The third take-home message is that we believe that the US market is still very large. It's a well-developed market in the pharmaceutical industry. And also, the Chinese market is also growing and growing. As one of the topics for tonight is really to look into the pharmaceutical industry in China as well. I will say that in the next few years, when we are seeing more elderly society will be becoming more and more become a fact, and also as we can see, there are a lot of medical need in this high quality drug product to fight cancers, to fight diabetes, all kind of diseases that is already showing up in the developed countries are going to show up in China as well. they are definitely need this high quality product, but also can be affordable to the normal Chinese people, Chinese consumers, to use this high quality product. So these are the very emerging, or I won't say very immediate medical need that in China nowadays. So I won't say our strategy is really fit into the trend of this, our whole China microeconomy growth, and also fit into our strategy of our company.
Thank you, Mr. YiDu. In fact, if I may add anything, I think the regulation here, not only in the healthcare sector, but the financial sector also is definitely getting much tougher since the financial crisis. So I think that's very true. So before we continue with some further questions from the organizers, from us, I guess we will, for the sake of time, we'll open the panel to the audience, and I'll let you guys to ask questions. So we make it more interactive. And please go ahead. And I guess, yes, yeah, you can go ahead.
Yes. I'm asking about inflation. So my name is Chen, and I'm a FRM. So question is, in China, everyone knows there is an inflation, more or less, and also the M2 has reached 120 trillion yuan, like 18 trillion US dollar, which is a little faster in increase. So the question is for individual investor whose money is not enough too many money to invest in like hedge fund vehicle something. Is there any way to fight against inflation? I mean, both in China and in US.
So I think really, so I'll take maybe a shot at the question. The inflation, that issue, right? So quite frankly, that issue we face here too, right? So we know the interest rate has been zero for a long time, and obviously there is inflation. So if anybody ever take a subway ride or take a taxi or pay a toll or do anything, buy food, right? You know the inflation is clearly there, but yet your interest rate has been essentially zero. So as part of the problem, right, as the financial crisis unfolded a few years ago, so there was no question back in 2006, 2007, due to some really poorly made macro policies, in my view, engineered by the former Federal Reserve. So when that happened, right, so there has been over-financialization of the market. So in fact, a few years back, there are a lot of newspapers talking very proudly about U.S. is becoming a financial economy. In fact, there's no such thing called financial economy. And that proud statement from a few years back never appeared in any newspaper afterwards. But when the over-financialization caused a certain degree of mix-up between production and real GDP and also financial market, it can lead to very bad consequences. So as a cure for the problem, so as really the really resort for all parties, which is controlled by Federal Reserve, so there comes a QE. So as part of that program, so the QE's main cure really is to deal with the U.S. market. So overall, we are going to reach a level where the deceleration into very bad economic consequence potentially will be averted. But the consequence for that, though, is almost all emerging market, they essentially function to some degree like a regional bank to the U.S. as a central bank. So when you have that type of system, every single emerging market, there's no exception in fact, will face inflation. So in fact, we face a mild inflation. I mean, we face a very low inflation here, but no interest rate. But in other countries, there is a of course, higher interest rate, but much higher inflation. That problem, unfortunately, there's no easy way to deal with that. So in the liquidity providing stage of the QE, like in 2009 was a good example, also last year, there were some concurrent gigantic QE programs in place, authorized by Japan and US. When you have such a program in place, it's very often lead to the risky asset to inflate very quickly. But here it calls for the timing. So in this case, it requires, quite frankly, professional traders to deal with that. You can have a similar economic outcome. You can, of course, go into 2008 where everything goes downhill. That's something cannot be ruled out in the future. But if you have a massive QE type of program, whether it's a European version, Japanese version, or US version, if people are willing to pump money to that can cause risky assets to rally. So the bottom line I'm trying to say is a trading market. There's nothing that offer you risk-free way to beat the inflation. That just doesn't happen. You have to really be, in some degree, a timing-based investor to beat the inflation. The long-term theory still holds. The long-term investment in the stock market would make a lot of sense. That's perfectly true. But on the short term, though, there's no such guarantee. So the bottom line is no risk-free way to beat the inflation, but a risky way but requires professional measure.
Okay, for the sake of time, we will have 2 more questions, and then later on we'll finish the panel and have open discussion after the meeting. So we'll have 2 questions, one at front end, one at the back end, I guess. So yes, please. Yeah.
So first of all, let me introduce my startup company. We are called iDribble.tv, and we congratulate today's successful event. And this whole event has been live streamed to China, and there are thousands of Chinese college students are watching this whole event. Congratulations! So I saw one question posted by Chinese college students. That's actually bringing the whole complexity level down a little bit. So they're asking about, you guys gave out many details about the very details about finance industries in the US and how US and China are interacting with each other. And they're actually asking how Chinese students studying finance and economics can better prepare themselves to face a future more globalized finance industry. So that's the question. Thank you.
I would just maybe give a shot. I think that the financial industry, especially for young students, I think that fundamentally you'll be prepared for a lot of things to do with the math, with my experience. Because essentially all those derivatives, futures, options, is all math-based. So you can have a good economic theory, but at the end, if you want to make money, you make a bit of how do you hedge your delta and omega. So essentially, you have to be very fluent in your basic math tool to derive the formula to get you how you want to track your economic value. That's, I think, the basic issue right now we face. And we need a lot of people with a good, solid, fundamental, financial engineering background to deal with the complex issues we have today. I think today in the US, obviously it's probably leveraged and has a lot of deleveraging happened in the last few years. The regulators learning how to deal with all those complex issues. But I think China very soon going to get quite a lot of complexity coming in the system.
I'll take a shot at that. I look at it similarly, but I think the emphasis is language and law. If you come to the US, the math skills are not replaceable. You have to have those math skills. But secondarily, most young people do not know how to write properly. That's a gross statement, but they do not. And I see this day after day. Throughout the country, there is a deficiency. There's actually a language deficiency also. So if a student is asking me what they should do, strengthen their language skills and understand the law, because what I have done is understand the law to the numbers, and that's invaluable. If you're in the sciences, you're developing a product, you have to bring it back to a language. If I were starting over, I would strengthen the writing and reading capability along with the language capability, and more, I agree wholeheartedly, you have to have those math skills. But that is the combination, and that is my recommendation to any student that's at it.
Great advice. So basically, you need to be good at both math and language. And so the next question, and also last question from the audience, will be from the on the back side. Yes, please.
Actually, I have two questions. The first one is, how do you think the overseas students can contribute to like Chinese economic market if they finish their study and they want to go back to China? Because a lot of my friends told me they don't see much opportunities in China right now for their skills.
Would you like to finish the second question too?
My second question is how and to what degree do you think Alibaba will affect the trading market?
In fact, today in the audience, there's one expert who knows Alibaba very well, so later on we can ask him too, but please.
I think for your first question, I think that's definitely not true. Definitely there are a lot of opportunities in China for sure. I myself actually worked as a sea turtle for a whole year. I worked started work for 7 years, and between 2012 and 2013 I went back to China and worked for a Chinese American company called Xiaoguang for a year. We definitely see a lot of opportunities, a lot of need in China nowadays, especially looking in the financial industry, pharmaceutical industry, all this, as I said, high-end, technical industry. There are definitely a lot of need for students that have been trained well in the States and get good English skills and good knowledge about how U.S. is working. Actually, you definitely will have a lot of opportunity to use what you have learned, not only the technology, but what you have learned, the way the U.S. people, U.S. industry is doing things, and bring them back to China, and that will help the China whole industry, to upgrade. So, but definitely you need to adjust yourself a little bit. You be prepared. You definitely will see some cultural, back culture barrier. You'll see something that you may not be seeing that. Because I believe many of the students that are coming aboard never worked in China before. So China nowadays have a lot of opportunities, but also a lot of challenges. You need to learn to adjust yourself, to be prepared for the industry. So that happens in the U.S. as well and in China as well. So while we prepare, and you definitely need to just keep looking, and there will be a lot of opportunities. So, but I think for the salary ones, I think that is very, you must be very careful very much about compensation. You have to realize that in China, is developing itself. So the human cost is still not comparable as the U.S. That's for sure for some industry. But that is largely depend on yourself. You can demonstrate your capabilities, and you can definitely do a better job no matter where you are. And the compensation is something that comes with it. So that I must say.
I have just one comment on that. I don't think that the Chinese students should necessarily look to go between just the U.S. and China. There's a world out there that is it's really good. And there is opportunity. And if you talk about and listen to the efficiencies of a market system, you're going to go where you can gain the greatest wealth. And that can be in countries and places that you never thought of before. I do a lot of international travel to many places, and it's amazing how people ended up going there from some country you'd maybe never heard of. And you ask them why, and they told me that they found an opportunity there. So for the Chinese student who's thinking about US and China, actually the end result may be somewhere else.
This is actually the fourth country I live now. So anyway, I guess we will finish the panel now because of the time limitation. But we will continue the conversation informally after we finish the panel, and I'll turn it to the MC tonight.
Thank you so much for giving us this wonderful panel discussion. And right now, our forum is closing to the end. As Mr. Chen has mentioned, we still have networking event in the gallery just outside the entrance. You could see it when you're stepping out. And thank you again. We do apologize for the timing issues because it's a little late right now. And I hope we can do better next time. Thank you for all the help and support we received from you. Thank you for coming. See you next time.